Hey there, YouTube family, I'm back, and I'm going to get right into where I see the S&P 500 going. The S&P 500, it hit that 4,200 level at the end of January, and since then, for the entire month of February, it's been steadily falling. Now, if you follow this channel, you were prepared because that's what I said would happen, that it had to hit that 4,200 and that it should backtest the 4,000 level before it could move higher. Now, I gave that market prediction then, January 30th, not later. I explained that it could go as low as 39.50, but no lower, because the market needs to make a higher low before it can technically validate a higher high. This is all standard support and resistance technicals, mixed in with a little bit of experience. This morning, we hit 39.83, right between the 39.50 and the 4,000 support level that I gave. And I had advised that if anybody feels bullish, to load up right there. In my view, that was a perfect spot to go long on your favorite momentum stock. There's no reason we shouldn't climb from here to potentially retest the higher range. Now, I've been very clear in giving my opinion of where this market is going, but let me repeat it for anybody that's new. We are still in a micro bullish move up, which began in October and intensified in January. This was led by two sectors, big tech and communication services, the same two that were the worst performers in 2022. If we continue this bounce and we stay above 39.50 on the S&P, we should continue higher to potentially see if we can make a new high. For the markets to prove that this isn't just a bear market rally, we ultimately have to break over the last high, which I've shown you guys in past videos. That was the 43.25 peak made in the mid-August rally of 2022. That move up proved to be just a bear market rally when it failed to find support at the 4,100 level. The markets fell hard very quickly, and that gave us our October low of around 3,500. I don't want you guys to be scared. I want you to be prepared. If we break that 39.50, I believe these markets are going to crash. I want to keep it simple. If we're going to continue this bullish move up that we've been in for over 3 months, we need to see some strong buying volume right now to push us back up to those key areas that will initially be resistance, 4,100, 4,200, then ultimately back to that August peak of 43.25. Now there's going to be selling pressure at all of those levels that the bulls are going to have to overcome, but that's the micro bullish view. What is the macro bearish view? Well, I'm going to get into that in just a minute. Let's talk about the hedge that I've been teaching about on this channel for the last couple months. I've made some decisions there. The SQQQ. It is the 3x leverage ETF. It trades just like a stock, but when the NASDAQ goes down in value, the SQ goes up in value. For every 1% that the NASDAQ falls, as measured by the QQQ, the SQs go up 3%. I loaded up on the SQs when it hit that $32 to $33 range, and I told everybody in my chat group the exact moment that I did it. And it was hard to buy that day because if you remember, the markets seemed unstoppable. The bulls were breaking down, trampling the bears. That was the day when Tesla was breaking above the 208. And so it wasn't easy to go against the direction or the flow of the market and to start buying a hedge that would only go up if the markets went down. But I knew that on that very bullish day, if I was going to take that trade, that was the day to do it. Now this morning, I took profits at $39. Thousands of dollars of profit made on the SQQ today. Now I gave that $39 target in a previous video, so you guys knew where I was eyeing. If you've been understanding my game plan, you understand that even though these markets have been in a micro bullish trend, I expected them to backtest 4,000. And if the trend is going to continue to the upside, we should see a pop from that 4,000 level. And that's the perfect spot to take profits on the bearish SQs hedge. Now I know that from the chat, there are a few of you guys out there that played the Qs without a stop loss and you got stuck holding at a higher level. The big question that you're going to have for me is, will the SQs get back to 41 or even as high as 51? And I'm going to cover that next. Before I do, please welcome me back from my trip to Peru by hitting that like, say hi, and throw a heart in the comments. I have to say I'm truly happy to be back, and I appreciate all the support and the kind comments that I received while I was on my trip. It was a very successful trip, but it's really good to be home back in the States. Guys, stop trading alone. Subscribe to get daily stock and crypto videos. Tonight, I'm going to be doing a live on Larry's page with Keenan Grace and Stockmo. Don't miss that. I think it's going to be absolute fire. Now, I want this video to be super clear. All this talk of us being in a micro bullish trend could be confusing. Now, I will not believe that the markets are in a macro bullish trend until we break above and close above that previous high that was established in the mid-August of 2022 of 43.25. Until that happens, all of the bullishness that we've seen in the last 3 months is just a long bear market rally. A lot of stocks have moved back to the top of their trade range. And if we break back below that 39.50, which we're very close to today, and we don't make a new higher low, these markets could easily give back the 20% pump up from the October low. And if you got back into big tech or communication service sectors, the ones that have been pumping, where stocks are up 100% or more from their lows, Tesla, for example, up 100%, Meta up over 120%. If you got back into these and you don't intend to play with a stop loss, your investments could be positioned right now for a 50% loss in the next 45 days if we break that 39.50. If we break that higher low position, then statistically, the likeliness of us getting a lower low has become very high. Now, this doesn't mean that every stock is going to get back to its June or its October lows. If you didn't buy your favorite stocks at those key moments, you may never see those prices again. That is why I've repeatedly said that you have to be prepared to buy on days that nobody wants to buy. Now, I've provided both sides of the bullish and the bearish case for the markets, but I'm going to recap. The economy is still smoking hot. It's seen in numerous data points, but most clearly it's been seen in the January jobs report. The bottom has never been established while the Fed was still raising rates, which we have a Fed that is still raising rates. Bulls have been feverishly buying because they believe that he has or will soon pause, pivot, or ease. He will not, because inflation is still a problem. It has been stubbornly persistent, and in my opinion, we will see persistent inflation ahead. Now, the Fed will stay the course because he has yet to cause any pain to unemployment in the US. It still remains very low. Let me quickly review the bearish case through 5 charts that underscore what's really going on in the economy right now. Number 1, the US credit cards are at an all-time high, near $1 trillion. People have already run out of their savings and they're racking up debt. And when they run out of credit, then we're going to see that impact on corporate earnings. Number 2, bankruptcy is on the rise. In the US, large bankruptcy in January touched the highest level since 2010. And then you've got number 3, the Fed's preferred inflation gauge is accelerating. Core PCI inflation is on its way back up. Number 4, fear and greed index. Greed is super high right now. It hasn't been this bullish for over 12 months. So the emotion driving the market is perhaps greed. We all know the saying, bulls and bears make money, greedy hogs get slaughtered. And then number 5, the sentiment survey. The historical data of the AAII sentiment hasn't been this bullish since the August high that I've been talking about and referencing in this video. So the overall bearish narrative and trend has not been broken, which means that if you are holding the SQs, you may see profits still in the days ahead. Now, I sold mine because I'm expecting a bounce at the 4,000 range, and I will get back into it after we get up a little bit from here. Let's keep in mind that all of February, the markets have been falling. That is also something that I predicted back in December, that January would be a potentially good month, it would move up and sideways, and February would be where the bearishness began. That's exactly what's happened so far. But if we backtest 4,100, 4,200, or even the 4,300 range, that would be the ideal spot for me to get back into the SQs. And I will let you know when I do it. But this is not advice on what you guys should do with your money. This is simply an educational video for the purposes of explaining my own risk positions in the market and why I take them. Now, I'm going to let you guys know what stock that I've loaded up on this morning and why. Before I do, let me share the offer from my affiliate, the Moomoo Investment app. If you guys need better trade tools, Moomoo is giving away up to 17 free stocks, so they've increased the number to open and fund a new account. These guys are available in the US and Australia. Take a screenshot of the exact offer for all the details. Moomoo is a zero commission trade platform with some of the lowest margin rates of any retail platform. I use Moomoo every day for their free level 2 data, free stock screener, earnings calendar, and 8 smart order types to protect my capital and to lock in profits. Click the link in the top pinned comment, get free stock, and you can start investing today. All right, what did I load up on? If you guessed Alibaba, ticker BABA, then you are right. Now, if you have followed this channel over the last year, you know that I have 100% accurately called the bottom buy and this top sell range correctly for Alibaba. And it was time for me to get back in preparation for their earnings. Earnings are tomorrow. I was hoping to do a more focused video on Alibaba, but you know I've been traveling, so this is going to be short and sweet. Alibaba, ticker BABA, is going to report earnings tomorrow, February 23rd, before the market opens. There is some high risk in this trade right now because not all the technicals and not all the fundamentals are pointing up. But for me, because I trade the technicals, we've come back to a key level of support that I've been waiting for, as well as the fact that there have been some notable investors who've recently taken a large position in BABA. Now I'm taking the risk of going long into earnings. BABA has had some challenges, but one of the bullish dynamics surrounding the stock right now is the stimulus money that China is pumping into the economy. So China has shifted from stimulating the economy through infrastructure spending, which is what they've mostly been known for, to consumption spending for the very first time. This is new, and it's going to position Chinese stocks and cryptos to potentially lead the true bull market, which I believe is still ahead of us. All of the consumption that is going to be done in China over the next 2 years is going to have direct impact on the corporate earnings of Alibaba. This may be the last time that you could get Alibaba below $100. China has upgraded their GDP target this year to 5%, which some believe is going to be conservative in light of the consumption stimulus and the fact that the economy has been opened up from the COVID lockdowns. $92.75 would have been the perfect bounce spot for a long play into BABA, but I'm not going to wait for it to get any lower. Right now, I've gotten in, and that's going to serve for me as a stop loss. And I wanted to get in early in preparation for earnings. I didn't want to miss this opportunity. My immediate price target is $110, but I will be very cautious not to take profits too early. With good earnings, we should hit around 104 to 105 easily. So in my view, I'm taking a bullish position on BABA, whether it's a hit or a miss. I got in now to play a hit and beat expectations, but my stop loss will kick in and I'll buy it again at 88 if it's a miss and the stock gets beat down. Let me know in the comments what you guys think of Alibaba, if any of you guys are trading it right now, and what your strategy is. In my next video, I'm going to provide some very specific technicals on the S&P 500. I don't want you guys to miss it. It's these breakdowns, it's these specific tops and bottoms that I give you that can help some people understand where they should buy or sell or take profits. Last call for the like, subscribe, and all notifications on the YouTube bell. Don't miss out on the live that I'm doing tonight over on Larry's page. As always, peace and blessings, my friends. I'm very glad to be back. Excited about the videos I've got planned for you guys this week. Look forward to it with you. See you in the next video.